Hello everyone and welcome back to a full 2024 year review of my stocks and shares portfolio, which has outperformed the S&P 500 this year by a considerable amount. Whilst being grown from £6,398 in January 2024 to now over £52,000 invested in January 2025, a growth of over 800% in just a year. Today I'll be showing how I grew this amount over the year, the trades I made, and overall return of my Trading 212 portfolio held in my stocks and shares ISA from here in the UK. If you get something out of this video, then please consider giving it a like and consider subscribing to the channel, as it does help it grow. So let's kick it off with the growth of the overall portfolio. As you can see here, this is the overall value of my stocks and shares portfolio, and back in 1st of January 2024, we had a value of sitting just over £6,000, £6,398, up by about 4%. And that's just when I got started investing in individual companies at the time. And I wanted to grow this amount into the future. I wanted to keep it compounding over the next 20 years. One of the main reasons being that when we get to this sort of value of over £52,000 and above, my contributions need to be less and less money, and the overall return and overall gains in the stock market will have that much more effect in the overall value of this portfolio. So I will have to do less individually. And as we can see, at the time of 1st of January, we had about a 4% return, and that was accounting for about £200 at the time. But that sort of return now would be sitting closer to about £2,000. So we can already see that the total amount in terms of pounds is considerably more for just the same level of percentages. So what happened? Well, I contributed as much as I could in 2024. Before April the 6th, when I was just sitting at over £6,842, up by about 11%, or around about £655. And I just kept contributing through that length of time, and then I waited. And on the 1st of April, when the new tax year rolled around, that's when I started contributing very heavily and started to ramp up my deposits. As we can see here, I was doing extra work and I had birthday money that I put into this account, and I remember that distinctly. I did overtime and that sort of stuff just to make that much more of an impact to the contributions I was making, on top of having an emergency fund, which took us to an overall value of sitting around about £19,000, up by about 7%, or around £459. And at the time, I remember thinking this was quite a considerable amount of money, but it wasn't quite enough. And I started looking for other ways I could start growing this amount, because I knew I was fastly approaching the amount of sort of threshold I could deposit for the year. And then I looked at my already held fixed rate cash ISA I held with Santander. And I decided that that 4% fixed rate, where I couldn't touch that money for a year, could be doing more in my stocks and shares account. So I decided to bite the bullet and transfer that money over to this account. As we can see, it went in two payments here, but it was £14,600 that I actually added to this 19k, taking us way up to over £36,000 invested. And then I just carried on investing and carried on pushing this money higher and higher. And as we can see, throughout the year, I've actually then gone up considerably in my rate of return at the same time. So now that we sit at a value of over £52,000. At the time, I was trying to be more sort of disciplined in putting money away, putting away more amounts, and not doing as many contributions, so that I could just focus on how much I was putting in per month. And then basically only investing in opportunities I saw in the stock market, not just investing that cash straight away, which led to an overall net contributions and debit of £40,839 with no withdrawals. So where did this overall return of about £11,697 come from? Well, there is a few different things. Firstly, we have unrealised gains, which had a massive impact, sitting just under or over now £10,000. Then we have realised profit or sales that were made of £1,444. Dividends received of £274 and £56 from interest made through money market funds on the uninvested capital that I've got in this account, leading us to an overall value of over 52k and some £696 that I have left in free funds and haven't invested yet. So you're probably thinking that's just great, but at the same time the S&P 500 is up over 25%, and from this level of return I haven't actually contributed more than that. So why bother? Well, the reality is that I actually have outperformed the market in that time, as I have said. So you would be right, just from looking at this rate of return, that obviously I haven't outperformed. But we have to consider the amount of money that I've contributed to this account, increasing it by over 800%. True time-weighted return for the year in total, well, we've actually returned about 35% compared to the market's 25%. So this year, my portfolio has outperformed, last year of 2024, this portfolio has outperformed by 10%. I use this now as a time-weighted return, as I do prefer it to the new system that we're seeing on a rate of return basis, because I trust it more. If I was to go by this rate, obviously I'm outperforming more, but I don't really think that is as accurate as the time-weighted return that I can see on Stock Unlock. Now, I'm not saying this is due to my brilliance or any particular thing that I've done individually. I had a lot of luck and a lot of timing that was just fortunate on my part when adding money to the account and finding certain investments and them being profitable. Obviously, we've been in a bull market at the time, which has helped out this portfolio greatly as well. Obviously, everyone is a genius during a bull market. If I had chosen any other point to start investing, then this return may be different, and I may be having a different discussion with you in this particular summary. But as I said, I focus on the long term. These gains are great, but they aren't what I am fixated on. I want to grow this sum over £100,000 invested in the stock market, as I say, so that it can compound over the next 20 to 30 years. So what about the trades I made this year? Well, let's go through a few of my best, and then we can touch on a few of my worst. Probably one of my best ones that was quite recent was actually trimming a position, not selling all the way out, and that was CRM or Salesforce. So I actually sold this one for 10 shares for a gain of around £717. Now, time will tell if that's actually going to be a good thing or a bad thing, and I still have a considerable margin in this actual business on my portfolio. That's followed by United Health Group, which I sold in August for around about £587 in gain, selling around 7 shares and selling out of the position entirely. Now, what about my worst trades? Well, those have to be actually mistakes of omission, as we can see here, or just early selling. So I sold Apple at $183 per share, with the share price now sitting at over $240. There being a massive miss out of about 25% potential return. And I actually sold him stock having 39 shares that would be worth close to 300% or more, when I sold them from now sitting at a price of $26 compared to what I sold at, which was around $9. So I'm far from perfect. As you can see by these trades, I have made many different mistakes. I don't really dwell on these mistakes, and I do not really look back at these choices as being terrible things. I learn from these mistakes, consider why I did it, and actually the reasons for me making these trades were sound, even if they haven't looked like that retrospectively. My reason to sell Apple at the time is the same as what the problem I have with buying Apple now would be, which is the valuation. I believe it's getting more and more precarious, with little to no growth over the past years, and has a multiple expansion as the only reason it has gained share appreciation this year. So if you ask me, the fundamentals are not getting any better, but the share price keeps increasing. Now, I don't know if that's because of passive investing or people are very excited about AI and the stock market in general, but I do have worries and concerns for this one. And then obviously if we're talking about HIMS, I actually bought into a stock I knew nothing about based on a recommendation, and I sold it for a very similar reason because I simply didn't know enough about the business. So when we look at those reasons, that might be a fair reason to sell out of individual holdings. And this is how the portfolio actually looks right now. These are the companies that I have chosen to hold for the next years and years. They're all companies that I believe in the growth path of, in their competitive advantages as monopolies or high industry leaders. And generally, I do believe that they have predictable free cash flow that's going to pay me off into the future in their overall profits as a shareholder. Now, obviously, first off, we've got my largest position in the form of Amazon. We have 74 shares at a value of over £13,374, up by about £3,000 or around 29%. Then we have Brookfield Corporation. I have 191 shares, which I added to just last month. We have now an overall value of £8,900 and our overall gain is about £1,379. Then we have Visa. I have 34 shares at an overall value of £8,635. We're up by about £1,523 or around 21%. Then we have Google. We have 37 shares at an overall value of £5,700, up by about £845 or around 17%. Then we have Salesforce at 20 shares at over £5,390. We're up by about £1,450 or around 36%. Mercado Libre, which has made a massive comeback just over the past week or so, up 6.2% just for this week. And it's now got 3 shares at overall value of £4,423 or around £469 in the green by about 11%. S&P Global, which had 7 shares at an overall value of £2,821 and we're up by about £467 or around 19 to 20%. Finally, my smallest holding, Texas Roadhouse, which has 18 shares and I've probably held this for one of the longest at £2,682, up by about 56% or around £971. If we look at this on a weighted basis and how much of these individual holdings have an impact on the portfolio, Amazon sits at 25%, Brookfield at 17%, Visa at 16%, Apple at just close to about 11%, Salesforce less than that now at 10%, Mercado Libre at 8.5%, S&P Global at 5.4% and Texas Roadhouse at 5%. Now, I'm happy with the weighting on all of these stocks. Amazon is my biggest conviction holding and the one I have the most faith in. That's why 1/4 of this whole portfolio is in this particular stock. And generally after that, I'm carrying on adding to these holdings. But what do you guys think? Do you like this sort of portfolio and overall review? Let me know down below. And as always, thank you for watching. I do appreciate it. And I'll catch you in the next one.